You've probably heard the term RWA floating around crypto Twitter, podcasts, and YouTube recently. And no, we're not talking about wrestling. In crypto, RWA stands for real-world assets. And if you're paying attention, it might just be the biggest narrative in blockchain right now. In fact, some analysts are saying RWA will be the key to bringing trillions of dollars on-chain. But what does that actually mean? Why is everyone suddenly obsessed with it? And more importantly, how can you position yourself before this trend goes mainstream? Welcome back to TechWise, where we break down the biggest trends in tech, AI, and crypto without the hype. Today we're diving deep into RWA, what it is, how it works, and why some of the biggest institutions in the world, including BlackRock, JP Morgan, and Citi, are betting big on this quiet revolution. Let's start with the basics. Real-world assets are exactly what they sound like. Things that exist in the real world, like real estate, commodities, government bonds, company shares, even invoices or intellectual property. Traditionally, these assets live in the traditional finance system. Paperwork, legal contracts, slow settlement times, middlemen, and endless friction. Now imagine taking that asset, say a $1 million bond, and putting it on a blockchain. Not the bond itself, but a digital representation of it. A token, backed 1-1 by the real thing. That token can now be traded 24/7, instantly, globally, and without paperwork. That's the core idea of RWA in crypto, tokenizing real-world value and bringing it on-chain. Here's the wild part. This isn't just a theory anymore. It's already happening. JP Morgan has executed tokenized bond settlements using its blockchain platform. BlackRock recently launched a tokenized money market fund on Ethereum. And MakerDAO has been buying US Treasuries and backing DAI with real-world yield. So we're not talking about some far-off DeFi idea. This is live, regulated capital flowing into crypto rails. Let's pause for a second and look at the numbers. Estimates say there are over $800 trillion worth of real-world assets in traditional finance today. Crypto, by comparison, is just over $2 trillion in market cap. So even if a tiny percentage of RWAs get tokenized and moved on-chain, that's hundreds of billions, maybe trillions, of new liquidity entering the space. But why now? Why is RWA exploding in 2024 and 2030? There are three big reasons. First, regulation is catching up. Governments and financial institutions are no longer ignoring crypto. They're building frameworks around stablecoins, tokenization, and digital securities. That's opening the door for institutions to experiment, and RWA is the perfect entry point. Second, yields. With interest rates rising globally, assets like treasuries and bonds are now offering 4 to 6% yields. Protocols like Ondo Finance and Maple are giving users access to these returns without needing to leave the crypto ecosystem. Third, infrastructure. We finally have the tech to support it. Ethereum scaling, permissioned blockchains, KYC on-chain, custodians. It's all coming together. So now RWA isn't just an idea. It's a working system with actual value and product market fit. So how does it work, technically? Let's say you have a private equity firm that owns a piece of real estate. They partner with a tokenization platform, like Centrifuge or RealT, to issue a digital token that represents fractional ownership of that property. That token is backed 1-1 by legal documentation, audits, and compliance. Once issued, it can be traded on-chain, used as collateral or even yield-bearing. Think of it like turning real estate into an NFT, not for art, but for ownership and income. And here's where it gets even more interesting. When RWAs are on-chain, you can integrate them into DeFi. That means you could one day take a tokenized bond, deposit it into a lending protocol, and borrow against it instantly. Or stake your tokenized real estate into a yield farm. In other words, we're not just making assets digital, we're making them programmable. This is why so many big players are piling in. They see the long game. BlackRock doesn't care about meme coins. But they do care about bringing trillions in capital markets into a faster, cheaper, more global system. Even governments are testing this. Project Guardian in Singapore, the UK's Digital Sandbox Initiative, Hong Kong approving tokenized green bonds. This isn't just a crypto trend. This is global finance starting to move toward blockchain rails. Now let's talk risks. Because yes, there are plenty. First, regulation. If tokenized assets are treated like securities, they'll need strict compliance. Not every protocol is ready for that. Second, trust. Just because something is tokenized doesn't mean it's safe. You still have to trust the issuer, the custodian, and the legal framework. There's no such thing as decentralization when the asset is physically off-chain. Third, liquidity. RWA tokens aren't traded like Bitcoin. There's often limited demand and longer holding periods. So you're not flipping these overnight. It's more like passive income and long-term investment. But the upside? Huge. RWAs are already showing signs of becoming the bridge between traditional finance and DeFi. They offer yield, legitimacy, and stability. Three things crypto desperately needs. And for investors, it opens up entirely new strategies. Stablecoin savings backed by bonds, cross-border lending backed by invoices, tokenized real estate portfolios accessible from your wallet. We're still early, but the players are in. The rails are being built, and the money is coming. So if you're into crypto for the long haul, not just the hype, keep your eye on RWAs, because this might be the most important unlock in blockchain since DeFi summer. If you found this breakdown useful, hit that like button and subscribe to TechWise. We cover the stories behind the tech, not just the noise. And let me know in the comments, would you invest in tokenized real estate or government bonds on-chain? Would you stake an NFT if it meant earning real yield? The future of finance is unfolding, and it's happening on-chain.